The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon. And Eastern Time, of course, right now. And 877-927-6648 is the number to call. And a number of sudden requests. That's why I was just a little bit there flummoxed. But we're back. Hey, Dow made an all-time high. S&P is not there yet. I'm going to review something. I've been talking about this for a long time. I said I cannot believe it, but everything about the ChapmanWave and the methodology I use, all of which, of course, I'm teaching on Saturday in my review of major techniques in the ChapmanWave methodology, plus the newer ones, plus the refinements that we go through. All the questions are answered right on the spot with examples. I have a book. You can ask me anything you want, and I got at least 10, minimum of 10 examples for everything. But usually it's way, way more. ChapmanWave a restart, a ChapmanWave an instant restart, whether it's an overlapping wave, an Eiffel Tower formation, whether it's the channels, all the work that I do with channels. Look at this chart that you can see right here on Tiger TV. Channels. So let's run the numbers, and then I'm going to talk about this chart that I've spoken about so often. Dow's up, excuse me, Dow's up 22 at, let me just open this up a little bit bigger so I can see it. There you go. The Dow is up 22 at 14,277. It was higher earlier today. It was in the 14,300s. Hey, nice. Comp index is -3 at 3220, and part of that is because Apple's giving back some of the gains of yesterday, I'm sure, because of the weighting. The S&P is up $1.71 at 1541. I'll talk about this chart that you can see right now, but I'll talk about it in a moment. Gold is so close. In fact, I would say that gold is within, it's probably made some kind of a low this morning. That is the second attempt, but with a lower low of we'll talk about that as well. But it's making the inverse of what I'm looking at in the dollar, which the dollar has made a peak F, but it could go a little bit higher because of the way the fast-moving average of the MACD is. That could go to G, or it could recycle, but that's not the point. The point is, for the very first time, you are seeing an intraday move with a number of these gold stocks that says they are about to attempt some kind of a bottoming process. Okay, we'll get into that a little further as we move along. Silver is also, so the gold is up 6.80 at 1581. Silver is up 41 cents at 29. You've got platinum down 3. You've got high-grade copper, wow, 349. Oh, not good. Down 2.4. Crude oil is down $1.80 at 89.62. That's why the airlines are moving so nicely. Well, one of the good reasons, besides the fact that it's been such a long time we've been talking about how finally they've got a process that, and that process is almost like a Harvard Business. It's like Harvard Business School has these templates that fit perfectly for the courses that they teach. I'd always spoken about Bill Clinton being the absolute perfect politician. Raise your finger to the wind, see exactly which way the wind is blowing, drop in on any group with a parachute, and within 3 seconds you know what the majority of people are wanting, and you talk about it as if you knew everything about it. And often he was a very well-read person, and I would say he's one of the more knowledgeable presidents. And as much as there were moments that he was just so detestable, there were moments that he pulled his weight, and he would do the right thing. So what is interesting is going back to the premise of looking at the spectrum of where we are, why we're at where we are, and how you can think one thing, but you have to technically do another. what is interesting here is that the airlines have developed a process that has nothing to do with flying. It has everything to do with garnering as much and squeezing as much in the way of profits from all the peripherals. When you look at your ticket, if you had looked at your ticket 2 years ago, you would have seen that all the extraneous costs were huge and that the actual flight didn't cost very much. Now, it's the same thing, except on the ticket, it doesn't show you the baggage, the snacks, the food, the toilet, everything they're charging for. Well, I think the airlines have got a good plan for them, not a good plan for us. Now, let's go on, because bonds are down 0.5 point. So, and I've discussed this a lot, and I'll just go through it very briefly. Bonds should be way, way lower. They are being held up so that, in fact, I talk about the dollar and wheels spinning for a long time, that actually there were some huge rallies in the dollar, but you'd never see it in the price movement because whack-a-mole, bam, 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 the Fed was pushing the dollar down. So it usurped all that energy. It was almost like, now in the 1920s, late 1920s, they went from from 4-cylinder, 6-cylinder to V8s, to V12s. There was even a V, I believe it was a 20, can a 20 work? 10 and 10, yeah, V20, right in 1929, or the very beginning of 1930, because production was still in place as the Depression started. And now we're getting V8s, V12s, a lot of V12s. In fact, there was a report yesterday that said Ferrari has sold 36% more in sales this year. You've got it is an extraordinary thing. You've got Bentley, you've got Lamborghini, you've got a Lamborghini. Actually, it's a car that I've never particularly liked in style. I don't like chisel points. I like the softer lines. It's my own personal preference. Got nothing to do with, it's just my thing. But they've got a Lamborghini that's on sale for 3.9 million. There are only 3 of them. And does 220 miles an hour. You remember my article that was written in the 1980s, The Psychology of Investing? I spoke about we will eventually be seeing 200 mile per hour cars, production cars. The Cadillac will come. This is when Cadillac they stopped even making the convertible Cadillac. It was like the worst car you could ever buy was the Cadillac in the 1970s. I spoke about, this is the 1980s. In the 1980s, I spoke about one day the pink Cadillac will be on show and Cadillac will be the premier American company again. Who thought that could have happened again? It took 30 years for it to happen. So let's get to the market. And the dollar right now is up 25 cents. So I just need to look at the dollar for 1 second because it's very important. Oh, let me just show you this. This is what we're going to go through on Saturday at Babson Executive Conference Center. There's still today. If you can call in today and you can sign up, we'll send you out that CD right away. Most importantly, you do need the CD introducing the ChapmanWave methodology. You need to have taken at least one of my courses, webinar, or preferably the level 1. But this is going to be a look back at all the different techniques. But there's so much there that even if you don't have the exact grasp of the counting of the peaks, the patterns, these are patterns. Look at this pattern right here, the falling axe pattern. You break above it, and it can go to 1-to-1, which is almost done in the E-minis. Look at the 120-minute chart. It goes to D, pulls back, makes a cup formation, goes to E, slightly higher. This is the E-mini 120-minute chart, March contract. And then I notated F, and plop, you can expect the deepest correction from F. Doesn't have to be a crash. I'm talking about the 120-minute chart. Would be a crash if it plunged down to the 1520s or something. But it doesn't have to do that. It just says time and price, and that's very important. MACD is a little negative. Stochastic still at 89%. You got to watch this carefully. There are a lot of buyers out there. Okay, and that's the 120-minute chart. Look at the weekly chart, leg E in the March, but now you get a different one because it's ESM coming into June, and that's only in leg C, and that corresponds beautifully to what? This fabulous weekly chart of both the Dow in leg B up in the weekly chart. That is really positive. and the weekly chart of the S&P, which is in leg C, matching the June E-minis. Okay, now let's go to the story. See this chart right here? Chart I've featured many times, usually in black, but often enough for my subscribers, I send it up in white. Now look at this. Channel work. Look at this beautiful channel from 1994, from 452. Let me say that. The S&P was at 452. And it goes to 3 buy modes. It goes to peak D, pulls back, peak D, pulls back. Actually goes to an E, sharpest decline. See the MACD and the stochastic? If you were losing the relative strength gave you a sell signal way early. It never went to a new recovery high in all that period. Other techniques did. So you've got to be very careful in using certain of these techniques. So go to peak D, the third buy mode goes to the March of 2000, 1557.87. Pulls back. Look at that beautiful channel. It breaks. I could make it more complicated, but in this case, I don't want to. I use something called the Insight Track, which I teach in my courses. I'm going to leave it for now. You'll see it a little later on. Comes back in a most beautiful down channel to trough E at 768. Then it goes up 2 buy modes, peak E, and then another peak E on October of 2008 at 1576.09. Makes a top, plunges down to that 666.79 low of March of 2009. That was, remember, I got the buy signal. We went long in the diamonds on the 6th. That was a Friday. The S&P made its low the following day, trading day, Monday. So there's just a slight difference in time. And now look, on a monthly basis, it doesn't make any difference. Now we've gone to a peak in the S&P, leg C. Now I'm going to talk about some nitty-gritties. Just briefly, I'm going to go into much greater detail on my Saturday webinar. Look at the way that the resistance, you see that resistance all the way into the 1550s to the 1570s? But this is still only leg C, and the MACD and stochastic are performing beautifully. So I wanted to show the channel. I'm not going to discuss this now, but there's an inside track in my CD introducing the ChapmanWave methodology. I talk about that inside track. Spend a lot of time on that. And then there's an inside track high and an inside track low. And it came right off the low and bounced. So this is leg C. And it says that there should still be higher highs to come because of leg D, number one. And number two, it says in time, you went from a low of October of 2002 to October of 2008. That's 6 years. We've only been from March of 2009. This is the 4th birthday. What's today? The 6th. Today, happy birthday to you. Happy birthday to you. Basil Chapman, Tiger Technicians Hour. Dow's now up 38. S&P's up $1.76. I'll be back straight after these messages. And we'll conclude with the birthday celebration of the S&P from its low of 666 to today's high of 1545.25. And then I'll talk about the other things that I was requesting.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. A couple of questions. First of all, EWG. I'm using that as the DAX. The question was the DAX. I can only do the EWG, but the pattern is pretty close. This is the iShares Germany Index Fund. Monthly had a beautiful, beautiful peak F top with 2 doji candle highs. I love that. 36.71 in December of 07. They are very different. Right, well, if they're very different, obviously, because one trades at night, one doesn't. So I'm going to skip that, but all I'm saying is that it's acting very well. Monthly chart, 92% is the stochastic right now. MACD is still positive, but it needs to decisively break above 26.19, and right now it's at 25.13. So we've got about another 1.25, and that 1.25 is somehow manufactured. It'll be very positive for the weekly chart as well. But the weekly chart right now is saying, whoops, be careful, consolidation unfolding, as well as the daily. All right, so that's that. Now I had a question, email question. Hi, Basil. I was wondering if you could look at the SCO today, 2 times short crude oil. I have a small position at 36.70. I'm trying to apply and learn the ChapmanWave. If you go to the daily chart and look back, I have an A at 37.10. All right, let's just go there. SCO. I do follow this because I love to do. This is what we're going to be doing in the Master Trader series coming up on Saturday. Master Trader series of the ChapmanWave, of course, and that is to look at the inverse, because if you can put the inverse together with the regular chart as a mirror image, very often it's easier to recognize one particular pattern either on the upside or the downside, to give you a great heads up as to what's going on. So let's go back here, and we're looking at, okay, the question is on the instant restart. Great question. So let me just deal with that, because it's not Technical Friday, but it's really important. The SEO is the ProShares Ultra Short, DJ, ARG, Crude, and anything you want to know about ProShares, folks, go to the front page of TF, and then you'll find out. It's very important to know about them. It made a low of 35.47 on the 1st of February. And then what is the order we look at? A spike to the upside from a given candle, in this case a beautiful doji candle. If it took out the candle and held underneath that candle of 35.49, that would not be good. In this case, it bounces, goes to peak A on the 4th at 37.10. It goes to peak B, 37.53 on the 6th of February. It goes to peak C at 37.65, and then it pulls back and it holds above. It goes to 35.52, and the low was 35.47. So it is holding. It's the pattern that I call the dreaded H. In my CD introducing the ChapmanWave methodology, I talk about this pattern a lot. And in fact, for those of you who always wonder about the buy signal going to the restart, the dreaded H pattern, the concept, you see the whole thing about the ChapmanWave, it's the concept of higher highs and higher lows being assessed and graded. That's the whole beauty of the simplicity of the technique. So if it holds, I used to say you've got to look at it closely to see whether you're going to have another count. Now I make it much easier. I say you use the count on the left. As long as it holds and doesn't break 35.47 in this case for that arch pattern, the H, lowercase h pattern, you want to use the count, even though this is a gray A right here, the low bar of the bar of the 15th at 37.51. I call it a gray A because it's a different color. It's underneath the previous ones. You've got to pick up the old count. I want to get to D as quickly as possible. I don't want to be stuck at a C waiting for a D and then the market tanks because I missed something. So this is exactly the most beautiful pattern for a ChapmanWave instant restart, except for one thing. And I always talk about this in my Master Trader series because it's so important. We can spend a lot of time on these things. I can't do this very quickly when I'm doing it now on air, and sometimes it's a little difficult to see. I'll even make this a little wider so that we can see it a little better. I should be looking at a black background chart, but anyway. So what I do is I go plus sign above, plus sign below, and then you get an inside bar with a lower high and a higher low. And the rule of the instant restart, ChapmanWave instant restart, there's no other technique that uses this, is that within 3 bars you're going to break above that peak D of 40.45, and lo and behold, on the 3rd bar it goes to 40.97. So what I always do is I go immediately that there's a parallel wave count, and it's very positive because invariably it takes you to a really nice E and even an F. That's where you got to be careful. Except for one of the techniques that I spend a lot of time on is how do you use the MACD? I'll be back straight after this message. We're looking at SEO. This is ProShares Ultra Short, Dow Jones, AIG Crude. And we've got Larry asking about specific things. I love the ChapmanWave and all your insights, Larry. And I'm going to go through this in a little bit more detail because it's really important. It tells us about crude oil. It tells us about the airlines. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, 877-927-6648 is the number to call. Dow's up 24. S&P's up 42 cents. Giving back quite a bit of the gains. From the 120-minute charts, everything looked like today. I said to subscribers in my opening call, that's my daily, very, very intense look at the markets. You don't have to do that. You can just go to the front paragraph of my Traders Corner, which just gives a quick summation, and then I go through the 17 or 16, 17, 18 different bullet points all the way down with our positions. I forgot to underline what I wanted as new positions today. I usually do that. I try to do that. That's my opening call. And what I was mentioning was that I anticipated early strength to become later weakness, with a chance there's a little bit of a bounce towards the end, but we would be off the day's highs. That's really very important. And I suspect by tomorrow we could make peak B with no new high, there's no higher high than today. But overall, I'm very positive. I'm looking for higher highs into next week. Now, the SCO, which is the ProShares Ultra Short Dow Jones AIG Crude, has a pattern in the 120-minute chart, which has that pattern of the falling axe, the one I keep talking about, the lower highs and much lower lows, making a cone-shaped formation to the downside. Looks like an axe. Look, there it is. There's the, probably not a very popular term today, talk about axes. Anyway, it looks like an axe. And all that needs to happen is if the SCO breaks above 42.94, it's at 42.33, Well, first of all, if it takes out 42.71, that'll give you a real good strong hint that it's going to make a cup formation towards the high of 42.94. My suspicion is that crude oil still has has weakness. The SCO still has strength, and there's a good chance it's not going to go much higher, but it could go towards the high of the most recent high of 42.94. It could go towards the 43, maybe 38, to even. I got a feeling it's not going to hold 44. That's what I'm looking at. So it's very close right now to reversing. If, in fact, it takes out, because the fast-moving average of the MACD and the stochastic are so strong, I'm looking at the wave. The tide hasn't turned, so there could still be higher waves. Let's put it that way. Nice way of putting it. Until the tide turns, the waves can hold. As soon as the tide turns, it'll be a rogue wave because it'll just have one splash to the upside, new high, and then that very bar will close towards the low and it'll make lower lows after that. So that's very important. So now the question is, what is it? You've got to have an alternate wave count. So the alternative wave count now is E/A, exactly as you've discussed it. For it to be a successful, and I always circle this because it's important to point it out, that is a potential instant restart. But the way the fast-moving average on the MACD is acting right now, there's a much greater chance that it's not going to recycle to another A to B to C to D to E, or at least to D. The fact is it's going to turn around within 3-4 days. It's going to turn around. That's the way I'm looking at it right now. And it's not going to go that much higher, that it will not go to a new D, that it isn't going to turn into an instant restart. It's going to be a continuation pattern. A lot will also be dependent on the 120-minute chart. The 120-minute chart says I'm breaking down, I'm going underneath at 42.28, I'm going underneath 41.60. There's a good chance it's going to retest the low in the H pattern. So I hope that answers your question. Weekly is acting quite well. Single leg A up here. No. 437.56. Yeah, single leg A, brand new gray A because the other one was a B minus. So that's the patterns I'm looking at. Now, let's go to just one quick thing. I said I would do... Where was the question? The question was... Oh, yes, the GDX. It wasn't a question. It was just a statement. GDX has made a leg after the downside in the daily. It can't be a trough until there's a higher low bar. You don't know that this is the low bar. It is a low bar, but it isn't the low bar until, at least for now, 35.57 is the low. Tomorrow you should see 35.58 or higher, and that'll make a trough F. And then what you want to see is the GDX, which is the gold miners, market vectors, I believe. Yeah, market vectored gold miners. It needs to quickly go above 37.78 and hold nicely. And that'll say, good, we've got a good opportunity of attempting to turn. The weekly chart says you can turn, but you're coming back for a retest at some time fairly soon. Let's go to Mike in Long Island. Hi, Mike. How are you?
Good. How you doing?
Very well, thank you.
Excellent. Dick's Sporting Goods is one I'd like to take a look at. Yeah. EKS.
Yeah, I've got DKS, and I had it with the black background charts because I know this chart very well. I forgot that I hadn't updated it in the monthly chart. Now, there are a couple of things that are going on. 2136. First of all, in this particular market, one of the aspects that I've been pointing out for some time is that it is really unusual to have sporting goods stores and clothing apparel companies doing as well as they've been doing if the Great Recession was still going on. It doesn't match up. It doesn't usually do that. So here's Dick's Sporting Goods, and they're almost at all-time highs. I'm just talking and actually working at the same time. I can do that. A, B. I'm going to call this leg a peak C at 52.24. The most recent high was yesterday of 51.27, and it's just $1 extra. And I suspect you're going to get that $1 extra for the monthly chart to go to leg D. The MACD is not good. Stochastics at 80%, that's okay. The on-balance volume is giving me a heads up to say, whoa, be careful, it's becoming somewhat overbought. And the weekly chart, just to do it real quickly, A, B, C, D. A, B, C, D, and it's making a cup formation. Oh, everything just fits beautifully. Do you have a position in this?
Yeah, I'm short it right now.
Okay. The way I'm looking at it right now, give me 1 second here. Let me just check. I think we're about to go to a break. If we're about to go to a break, I'd like to do just a tad more work on this stock because I think you might have hit something and it corresponds with other aspects that I'm looking at, as I'm looking at different sectors that are going to give me a heads up as to whether they are going to have a digestive period. It could turn out to be a more serious period, but a digestive period because there's a rotation going on and other sectors are starting to pick up the slack, like the mortgage, the companies that issue mortgages, etc. So I guess there is no break because it just went right by. I didn't hear any music. So let me do this. So I'm going to do this live so that everybody can see what I'm doing. This is the daily chart. I'm going to the low bar of the 26th of December at 44.24. Merely looking for higher peaks. There's one right there. A, B, C. That one misses by a penny. 49.03, 49, 48.99. So the next one is there. D. That's fine. D's right there. Brand new buy mode. A, B, C, D. Oh, everything's fitting so nicely. Folks, if you want to learn about the ChapmanWave, the way that you can get to your D's, very important. I need to just double check here. It's all very well talking about it. 49.03, 49, 48.99, 49, round number. Great. Okay. So I've done the work on the daily, and the daily says the MACD is at 90%. That's still very good. The stochastic is, the stochastic's at 90.48 is very good. The MACD is still very powerful. And the fast-moving average of the MACD is starting to flatten out. I have to just go back. I always want to go back.
On the monthly, Basil, I'm getting a different count, but...
Oh, you could be. Let me just do this. Give me 1 second. I don't want to slow this down here. Okay, I just want to finish this weekly for 1 second. A, B, C, D. A, B, C, D. Oops, there's a capital D. Capital's on the way up, folks, if you're watching. D. Yeah, you see, this is a pattern that we're looking at. It doesn't matter what you're looking at and what time frame. Let me show you a good instance of what I'm talking about. Look here, ESH13. The E-mini this morning had that same cup to a higher high on the right side of the cup formation as the MACD and the stochastic were pulling back. And that's, in this case, the RSI and the on-balance volume both gave a signal to say, divergence, be careful. Doesn't mean to say you get a major sell signal, but it does say divergence. So that's the reason why I wanted to look at it for the daily chart. Now I'm going to go to the monthly chart, and I'll actually, wrong chart. So this is going to be, I'm looking at DKS. Is that right? Yeah, DKS. You know, a stock I wanted to look at was DKW. Isn't that the shoe company? I think it is.
I think DWS is the shoe.
DWS. Okay, all right.
I don't know.
Yeah, you're right. Okay, so you get a different wave count. 2136. Oh, parallel wave count. So that's C.
August 1st.
Yep.
2010. I get I start ABCD.
Yeah, I get two parallel highs. I counted that because I was doing it very quickly. Wow, it worked out so beautifully. Let me see. C, D, E, brand new A, B, C, D. So you get a D where I get a C. Is that correct?
Yeah.
Okay, good. That's fine. I'll correct it in a minute. Actually, I like mine better, and I'll explain why in a minute. Because there was a little hiccup right there in the on-balance volume between the two bars. So I would have put a gray peak C because, I like to get to the D as quickly as possible. Okay. But it doesn't matter because then the next peak, where I've got peak B on April of 2010, theoretically, you could have called that an F, and then started your wave count and got to where you are right now. The way I've got it now adheres very strictly to rules that I have, and that is that after the D that you get on October of 2009, you see how it held the 9-period moving average? You see how the fast-moving average of the MACD never budged? It just stayed beautifully on the upside. See how the stochastic didn't cross negative at all? So that gave me an opportunity to say, that's a real good example of, I'm going to put it in my book because on Saturday I'm going to go into it in greater detail. So this is DKS monthly chart, and we said August of 2000. We said August, September of 2009. 809 to 909. That's phantom peak. Okay, good. And one of the aspects here is that when it goes to that B, my B that is, in April of 2010, when it pulls back, it doesn't come even close to the low after that trough of 18.50. That's like a positive divergence in the wave count. So anyway, it doesn't matter. What I'm looking at now in all aspects is that there's a pretty good chance that it's going to sneak that 1 point higher to make leg D, and then I will draw in a cup formation, and this will be one that's on my list as a potential short. Now it means, I don't know where you went short, but if you just went short recently, it's not a big deal if you've got instead of 1 point as a stop, so you got 1.5 points. What I am saying to you now, the tough thing is that you might have to wait a full month before you get the signal of a peak D. You know what I mean? In other words, in March, if there's a higher high above 52.24, if it goes to 52.25 or higher, you have to actually wait the entire month of April before you get a confirmation that you've got a peak. But if you're using your shorter time frames, that's the reason why I want you to quickly grab the weekly chart. It says using the shorter time frames, you can, in fact, we are. I'm doing it. I'm finishing it right now. There's a left side, right side potential price time match. And that says by next week, oh, isn't this nice? By next week or the following week, there's a good chance that it will squeak to a slightly higher high. And if the stochastic, which is a 74%, hasn't gone to 80% or higher, and the MACD is just barely positive, there's a good chance that you're going to have a chance to add to your position. At this particular point, I would say I would not add to my position until there's a new recovery high, and then you have to wait the entire week, because I know you like to look at the longer term, so the daily might help, but I think you really need the weekly chart in this particular instance, because if it is going to fail, by the end of March, the beginning of April, it should be well under 47. That's only 3 points away, and it sounds like like nothing. But in fact, this is a stock that's been trading sideways in a very narrow trading range for quite some time.
Right.
So I'm going to put it on my list. In fact, what I'm going to do is I'm turning the pages of my daily book over, and in red, I'm going to put down right here in the corner, give it enough days to say DKS short with a question mark. So thanks so much for bringing it to my attention.
Right.
The only question is, would you go long right here at this particular point? And I'd have to say, at this point, I would not be going along DKS. I think the upside's limited. I think we're looking at a situation where there's a chance that once it completes this move, we're going to be looking at a cup formation in the weekly chart and then a pullback. Hope that answers your question.
Yeah, thank you very much.
Thank you very much. Mike in New York, and we are going to go to, we're going to a break.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians. Let's just run through this quickly. We won't have any more calls here. So this is the final segment. Then we go to Larry Pesavento. It should be a wonderful show as always with Larry. Then we've got the Diagnostic Trading Hour. That's right. We've got Daryl Martin. We've got Dave White. Dave talks about his his most important technique as he studies volume as it's moving up to a swing point. Just it's a really interesting technique, and it just is some great trades based on it. And then we've got Ken Shreve. Ken Shreve, of course, our expert here on Investors Business Daily technical analysis based on that concept of how you come out of that cup formation. Just it really works well. When it works, it's just fantastic. And then, of course, 4 o'clock till 6 o'clock, you got Tom O'Brien wraps it up. Tom with all his different techniques, and we'll be listening to him as he wraps it up and tells what he's expecting for the next day. Goes through these different volumes and the aspect of volume. So here we go. EWJ is the Japanese iShares. It's a Japan index fund. It looks to me like it's acting very well. MACD is finally in the monthly chart gotten to 81%. MACD is looking good. The stochastic's at 81%. And it does have a target for the end of the summer. If it continues acting like this, then there's a target of that 11.638 high back in November, I think it was. February, is it? February of 2011, 11.63. It's trading at 10.47 right now. Now, the other aspects are EUR USD. I didn't do. That is the currency pair, and that, that's a little bit, whoops. Excuse me. Aha, I got the earphones away, the microphone away just in time. This is very much like the gold chart right now, except that the candle that's forming isn't as positive, and also the stochastic and MACD are not good. This is the euro-dollar currency pair. You've got a peak D in the weekly chart. Yes, there's a potential inverted head and shoulders pattern, but a lot has to happen because 1.33 is the resistance it has to get over very soon by Friday or next week. It really has to do that. This is it's trading at 1.299. So that's that. Let's just go USD, which has acted very well. USD JPY has acted very well. As it goes up, of course, that's weakening the currency. Now that held the 9-period moving average in the weekly chart beautifully. It's having a high-level consolidation, extraordinary move in the monthly chart and the weekly. The daily says it's trying to get to the top of this very ugly candle. It's at 93.639. Should try for the 94.446 area coming up soon. High-grade copper. If you don't mind, I'm going to go to M. HGM before we wrap up here. Yes, that's about to pull back. It's still pulling back. High-grade copper. It really needs to do something very soon. I'm not very happy with that chart. Now, let me just run through the Dow again. Because the Dow has made a beautiful extension in leg B up, and in the daily, leg B in the weekly, that's leg C in the monthly. I'm still very positive. We grabbed the DDM, which is 200% long, a few days ago, right at the low. We're very lucky, got that. And now, what I'm looking for is that the Dow might make a peak B if there's no new high above 14,320.65. So far, that's the high of the day. If that happens by tomorrow, it will make peak B. That means I can't get C until Friday if there's a higher recovery high. That means I can't get peak C until Monday. I can't get leg D until Tuesday. I can't make a top until Wednesday. That's the way I'm looking at it right now. And so it's very positive. MACD's at 89%, and stochastic's good. The SPX.X, that is the daily. Also very strong leg B. Good support at 1532. I'd say it's 1532 to 1530. Don't forget, I got my Master Trader series coming up Saturday. If you're interested, this is a great time calling. Find out about it. It's at a somewhat discounted price. And I'm really looking forward to it. I love teaching it. It's a review plus the new things in Wellesley, Mass. at Babson Executive Conference Center. It's time to sign up Saturday, 8:30 till 5 o'clock. And don't forget my opening call. I'll be back tomorrow. Have a great day.